Now, here is an example of a fundamental trade. This is the trade you could have taken using fundamental analysis. Whenever there is economic uncertainty and things are not going so well, we have risk aversion. So once you understand the concept of risk appetite and risk aversion, you could have made money this week. Now, the US bombed Syria on the 7th. They bombed Syria on the 7th. Now, US bombing Syria, what does that mean? Does that mean the US is going to enter the war against Syria? It creates economic uncertainty. And once we have uncertainty in the market, we have risk aversion. So the trade, whenever we have risk aversion, the trade is buy Japanese yen. And that is exactly what you should have done, and you would have made a lot of money. So the market opened here, and you could have entered the market anywhere in this region. Maybe put your stops above these highs. So maybe a 50 pip risk on this trade would be good. And prices fell over 180 pips. Simple fundamental trade, okay? Once you understand risk appetite, risk aversion, you could have taken this trade. So this is an example of a trade you could have taken using fundamental analysis, understanding market sentiment. Here we have risk aversion in the market, and that is why we have a stronger Japanese yen. So this was a simple trade, risk aversion, and the USD JPY fell over 180 pip. The Aussie JPY also fell, right? And you could have taken this trade anywhere in this region. The market opened here, and you could have taken this trade at the weekly pivot, okay? You could have sold somewhere here, stops above this high. That's about a 55 pip risk. Market fell over 150 pips. And this can continue going lower, because if the market sentiment remains the same, we will expect lower prices.